Filing income tax in 2026 might be different because of eTIMS. Do you remember the public notice issued by KRA in November last year about validation of income and expenses in income tax return? Today I want us to have a quick chat about it. First, let's clarify what validation of income and expenses means. In the context of filing income tax in 2026, validation simply means the process of verifying the amounts of income and expenses declared by a taxpayer against external data sources to ensure the information provided is accurate and supported by legitimate evidence. So, when filing your income tax return in 2026, KRA has listed three main sources of evidence it will use for verification. 1. TIMS and eTIMS. 2. Withholding income tax gross amounts. And 3. Import records from custom. This is not new. Every year, when you file your income tax return, the system cross-checks your data against other records it holds, including transactions reported in other tax filings and withholding tax credits. So, if this process has always been in place, why does it feel different this time? The introduction of eTIMS is what is different, even though the procedure remains fundamentally the same. Let's take a quick look at the history of eTIMS. KRA's digitization efforts started in 2005 with ETRs for VAT registered taxpayers. Then in 2021, TIMS was introduced, which also required physical machine, but total compliance could not be achieved because not all taxpayers could afford or were willing to acquire these machines. But in 2023, KRA launched eTIMS, a software-based alternative accessible through web, desktop, and mobile applications, hence removing the affordability and accessibility barriers to compliance. And now, finally, KRA could realize its original goal: electronic invoicing that ensures the real-time recording of transactions, capturing them at the point of sale, and as a result, capturing stock, income, and expenses all at once and in real time. Genius. Next came the legal framework. The Finance Act 2023 amended Section 16(1)(c) of the Income Tax Act to disallow deductions for any business expenses or losses unless they were supported by invoices generated through an electronic tax invoice management system, except for exempt transactions. It also introduced Section 23A to the TPA, mandating eTIMS use for all businesses, hence extending beyond just VAT registered taxpayers to anyone with non-employment income. Next, the tax procedures, Electronic Tax Invoice Regulations 2024 were published, outlining detailed guidelines. For example, Regulation 3, providing that the rules apply to all persons carrying out business unless exempted, and Regulation 7, listing specifics in terms of the contents of an electronic tax invoice or credit and debit note. Regulation 9, mandating the transmission of invoice data to KRA in real time. And Regulation 10, listing the exclusions of transactions that will not require eTIMS invoice. And to tighten compliance even further, in November 2025, KRA updated the tax compliance certificate application process, requiring eTIMS compliance from both individuals and non-individuals with non-employment income. And with all this effort, it's almost expected that no one would be doing business with a non-eTIMS compliant taxpayer anymore, because where would you even get one? That's why the income tax return filing for 2026 might look quite different. According to Section 2023A4 of the TPA and Regulation 10 of TPR 2024, The only expenses allowed for deduction without requiring eTIMS backed verification include emoluments, imports, investment allowance, airline ticketing, interest, fees charged by financial institutions, expenses subject to final withholding tax, and services provided by a non-resident without a permanent establishment in Kenya. But let's look at what is not exempt, and these are everyday business costs: rent for your premises, utilities like electricity and internet, marketing and advertising, professional fees, subscriptions and memberships, insurance premiums, and travel and fuel. For example, did your landlord issue you an eTIMS invoice in 2025? Or did your water bills come with an eTIMS invoice? Think about it. If your business runs on a pricey software subscription, or you pay hefty rent for an office, well, these expenses, these are expenses that you want to claim. How many of these suppliers were eTIMS compliant last year? Remember, now you're not allowed to use the trust me bro numbers anymore. So those deductions could get disallowed, and that would bump up your taxable income. For some businesses, this could mean higher liability or potential audits and hefty, nasty penalties. This is not about scaring you, it's about staying ahead. And here's the takeaway. Well, wait and see. This is what you can do. Request your TIMS and eTIMS schedules right now from your KRA account manager and cross-check your records. Gather all supporting documents early and don't wait till filing deadline. File on time to give yourself a buffer for any follow-ups or corrections. Stop dealing with suppliers who are not eTIMS compliant. And for 2026 transactions, make sure everything is eTIMS transmitted. That will save you stress and money. That's all for today. Thank you for engaging with us, and thank you for watching. Thank you.